We just got a few data for you because we've got the market closed officially in Egypt, so the currency is not in play. Nigerian market is also closed. We finished around 1,200 to the dollar. The autonomous foreign exchange market on Monday as well. Today, the South African rand was trading 18.7. That's slightly down on the dollar, but later went to gain about 0.6% on the US dollar. Today, you have this French speaking West Africa, CFA franc at a 1.29% better, 611.3 against the US dollar. And of course, finally, you've got the shillings, the Kenyan shillings trading 130.06, down slightly by 2 basis points against the American greenback. And that's just a few market data for you as we see everyone coming back tomorrow to open for the final trading day of the week across the continent. But let's move on back to Nigeria, where the big story really is, because the Naira rebounds very strongly against the dollar and the British pound in the first quarter ended March as the central bank continues to intervene in the currencies market. Meanwhile, the financial regulator is also rejigging the banks with a new recapitalization program, while the whittling down its own development finance department as the central bank looks to significantly scale down its direct interventions in key economic sectors. And there is more. Joining me to review both the monetary and fiscal milestones of the first quarter with outlook on the rest of the year is Bongo Adi. He's a professor of economics at the Lagos Business School. A good evening to you, Professor Adi, and we thank you for joining our Rice Exchange tonight, this Holiday Thursday.
Good evening, Boasin. Thanks for having me.
Thank you. We appreciate making the time tonight. Thank you so much, Professor Adi. What are your views regarding the broad monetary policies and actions of the central bank in the first quarter of the year?
Yeah, I think they have kind of confounded all the doubters. So news coming from across the world shows that the Nigerian exchange rates, the Naira, is the best performing currency in the month of March. Bloomberg has picked up that news, even The Economist magazine. So, you know, what has been the biggest problem with the Nigerian economy, especially in the past 1 year, is the crisis of confidence. And of course, the turmoil that we experience in the system is partly due to find its footing, you know, and the real forces at work in the economy. Everyone knew that Nigeria's economy, especially the macroeconomic dimension, had actually went off track. Went off track for a very long period of time. So was no longer responding to theoretical, predictions. So it was quite difficult. But I think what the central bank especially has done is actually to begin to address the commonsensical elements in the system that has actually disrupted the mechanism of economic and financial system in the country. So that seems to be working from all indications. And then if you go through, look at the history, the trajectory of the currency historically, we've never had it, Naira, bouncing back as strong as it has done in the past, few weeks. So I think all kudos to the monetary managers.
Well, Professor, are there signals that the central bank's paradigm shift in terms of policies are on track and yielding results that will sort of realign the financial markets, as it were, where the current administration wanted to go? What the central bank role should actually be in the economy? Is that what we're seeing? Are you seeing that realignment taking place gradually, putting the central bank on track, helping to put the exchange rate and the rest of the economy on track, and how crucial the central bank is to the whole ecosystem of the economy, as it were?
Yeah, I think everybody was decrying that the central bank lost focus for a very long time. So they were trying to do everything, became a jack of all trades. So, and by so doing, they actually lost focus and then stopped doing what the central bank was supposed to be. So, what has happened is that the bank has been refocused on its core mandate. So I understand that they are not dealing with monetary, controlling the money supply essentially. So their key target is inflation. But that hasn't quite started to yield the expected result. But again, if you understand the causative factors of inflation in Nigeria, you will know that much of it is cost push, coming from the exchange rate, pressure. So with exchange rate, with the Naira getting stronger, so there is every indication that we will see, as they also as they predict, inflation turning the corners sometime along the year, not immediately. So the economy has experienced quite a bumpy ride. A lot of people are complaining. Manufacturers, according to the data, more than 700 firms closed in between 2023 and now. So that's a lot. So manufacturing, even though it's the focus of the current administration, and then they have read out plans for the manufacturing sector, but we've not yet seen that. So until that happens and productivity, improves, inflation will be something to worry about. We can't say it's a good thing, but it is the reality of many African countries. You just mentioned that of Ghana. In Nigeria, I think we are recording, a two-decade high inflation rate, and I think that's actually hurting the populace. But with the current measures in place, with sanity returning to the financial and monetary system, I believe that in the course of time, before the third quarter of this year, we will begin to see inflation beginning to turn the corner.
I like that, Professor Adi. You just touched on that word I was looking for earlier, sanity. Sanity. That does it. Sanity. That does it. In the FX market, in the financial system, liquidity management, whatever it is, speculating against the dollar, whatever it is, dollar holding, and everything else in between. So do you think this sanity do you think we have enough sanity in the market right now that will encourage both local and international investors to say, look, let's get back into Nigeria, let's bring in funds in, let's do business with Nigeria, and local industries, businesses can actually plan on what we call a sanitized financial system, in a manner of speaking?
Yeah, so, if you follow the financial markets, you understand that, if you follow George Akelow's work, which is animal spirits, you will understand that, what moves the market is simply speculation and anxieties. So in the case of Nigeria, we've had enough of that, and really it caused a lot of havoc. And also the regulator at the time seemed to be part of the problem rather than the solution. But for the first time in a while, we've seen some sort of commitment from the regulator. It has actually manifested real enforcement power, and that is crucial, because the financial system, the monetary system as well, respond to signals. So once you give that signal that defaulters will be punished, and then you take measures to really punish defaulters, immediately people, all the other forces begin to align, and I think that's what has happened. So credibility is gradually beginning to return, and what international investors are looking at is that predictability. So if they are sure that they can come into the country and also exit without losing a hand and a leg, I think that is enough guarantee for them to come in. But again, that is not the only criterion to get the investors back or to get confidence in our system fully. But I think it's on track currently. But then the global financial situation is such that capital has so much, countries scrambling for it. and much of it is not, finding their way to Africa, not just Nigeria. So African countries, Nigeria inclusive, will have to struggle with, finding alternative sources of funding their development. I think that's been the major issue. I think in the recent UNDP development report, it was quite, illustrated there. IMF also took that up, showing that capital is not coming to many developing countries at this time. So it is important that why the CBN, the monetary managers are doing all this to restore confidence in the system. They also find creative ways to unlock, domestic capital, because eventually that seems to be the way to go. So we need to really lift ourselves up by our own bootstrap.
Very interesting. So let's take a little bit. We'll get to the fiscal side of the conversation in a short while. But how sustainable do you think the central bank firepower is to intervene in the FX market? The central bank is back in the market, selling fast and furious to the BDCs. The last was about $10,000, as it were, to thousands of BDCs, and says, look, it's going to be at an XY rate, and they can sell at about more than 2% or thereabout above that rate to end users. So do you think we have the kind of interventions the central bank has enough ammunitions to go after the dollar, the British pound, the euro, every other currencies out there, and ensure that the Naira is stable, that we can use for domestic productivity?
Yeah, so we have to look at it from a multifaceted perspective. So the first thing is that I think when you say that the CBN is intervening again in the foreign exchange market, that seems we are returning to the old days of managed exchange rate and all of that, because that will contravene the deregulation and all of that. So we believe that it's a free market is at work. So it's a willing buyer, willing seller sort of system that we have right now. So what CBN is doing is just what they legally should do. So supporting the BDCs, and then we shouldn't forget that most of them, I think more than 70% have been delisted. So we have just 1,000 and above from more than 5,000 just a few months ago. So that's also part of the sanitization that we have seen in the market now. So there are so many loopholes in the system, so many leakages. But from all indications, it seems the central bank has come to understand those sources and beginning to plug them. Then we also see in recent times, Dangote refinery has started to supply AGO to the domestic market. So it means that the pressure from that side, from importers, marketers of petroleum products on the foreign exchange is reducing. So with that, I think there should be sufficient forex available to the CBN to continue to support the domestic demand. So so we had the problem, the supply constraint, but then we also know that they've paid up the 7 billion indebtedness to industries and foreigners. So that means there is a little bit of confidence there. So not just the CBN source, there will be alternative other sources of FX in the market. So when we put all this together, so one can safely say, if we look into the future, in the short term, the CBN seems to be in a position to really regulate the market. That's the way I would put it. So they are now in a position to regulate the market, because if they were not in that situation, then it would be difficult for us to have, for Naira to have bounced back the way it has done in recent times. By the way, this is the sharpest drop that the currency has registered since data started being available. And like I said earlier, that is, to the CBN's management credit.
Okay, so do you think it looks like the central bank itself wants to is trying to cut off some fat, in a manner of speaking? So he's shedding staffs within his development finance unit as well, because he says he doesn't want to do much of direct interventions in the economy in various sectors, whether it is agri, power, oil and gas, whatever it is. What's your take on that?
Yeah, so if the banks are encouraged to capitalize, recapitalize, so the bank should have the firepower to really do that job. So let it be, the commercial side of things. So why CBN, the central bank, focuses on regulation. But that doesn't mean that they shouldn't really intervene in some key sectors. But then, that that system, the development finance side of things at the CBN, was grossly abused in the last dispensation. And in fact, some people attribute the waywardness of the currency market to what really transpired there. So anyone who went in there would actually, and if you're really committed to doing the right thing, the first thing that you need to scrap will be that development finance sections or segment of the central bank. And I think that is what the governor is currently doing. So I think I'm fully in support of that because it's sending the right signals in the market. So I think the economy, if we are going to run a market-led economy, it is important that credit is rightly priced, okay? Because that creates the right incentive. Of course, so many people do not want to hear that, but that is it. That should be. So there are some sectors of the economy that we should allow the market to really dictate prices. And there are some sectors in the market, okay, based on our development priorities that we need to really support. So while, taking his hand off development finance, it is also important to recognize that there are some sectors that government we need to really support in order to really catalyze, activities in those sectors. Because if you leave it to the market cannot do that. So that's something that the central bank needs to put into consideration while they are doing this.
Well, you're an economist. I'm just thinking whether, Professor, you give me an idea of what you think the exchange rate will be somewhere down the rest of the year. Do you have any idea? Do I have a figure in mind?
So I hope he's going to call back.
Professor Adi, I was asking if you have a figure in mind of what the exchange rate should be for the rest of the year. I guess we lost that very quickly. Professor Bongo Adi of the Lagos Business School there speaking to us about reviewing the monetary policies actions of the central bank over the first quarter, January to March, where we've seen the Naira rebound very strongly, gain about 1,000 points against the British pound, and sterling at about 1,200 at the autonomous foreign exchange market against the dollar just before the current holiday. Let's take a very quick way. We'll be right back with Professor Bongo Adi of the Lagos Business School. We're back with Professor Bongo Adi. He's a professor of economics. Bongo Adi, professor of economics at the Lagos Business School. And we're reviewing first quarter fiscal and monetary policies and actions of the central bank. Thank you so much. It's been an interesting conversation with you, Professor Adi. So I was about asking before we went down was about, do you have a figure in mind what the exchange rates, Naira dollar, would be towards the end of the year? We're around 1,200 so far at the moment.
With all the interventions in the market, the corrections in the market, I won't like to use the word intervention, with the corrections in the market. So when we now have, full price discovery, so we expect that the exchange rate we settle around its true value, the real exchange rate, so it will be below 1,000 Naira. So, but again, we just hope that all those issues have been addressed so far. Because much of what has been going on in Nigeria, whether it is with even current inflation or the exchange rate, were speculative. So that speculation seems to be, somehow punctured the actions of the monetary policy managers. So if these actions are, maintained, and also real enforcement is okay, I believe that every indication points in the direction of the exchange rate really appreciating to its true value. So we begin to have maybe a PPP, purchasing power parity value of the Naira. So yes, it will settle below 1,000 Naira eventually. But how soon that will be, I wouldn't tell right now.
Yeah, we've got about 9 months left, so we've got enough time to work our way down below the to back to triple digits as well. Let's finish up, round up around the fiscal managers, the political managers. What fiscal policies do you think are very urgent right now for us to support the current monetary tightening of the central bank? What do you think the macroeconomic landscape will look like this year at the end of the year, vis-a-vis 2023 period, with the whole Naira redesign, the political transition, and all the hot wire that we had for last year?
This year will be a lot better, and also the international environment. So the international headwinds are not as strong as they were in 2023. So we look at the United States, at the big economies, whether the United States or China or India. Both the United States and India are facing elections this year. I think India's election is starting on the 19th of April. That of the United States later on in the year. So people are expecting that the Fed will cut rates, but that hasn't happened. So inflation is beginning to show up a little bit in the United States, but they have an unemployment rate that is actually surprised everyone. Very strong economy, same thing in China, so people didn't expect the kind of rebound that has happened in China. So what it means that these economies will continue to demand for inputs, raw materials from developing countries. So even though inflation is still very high in some of these countries, those of them who have very strong trade profile will really, see some sort of amelioration of those inflation towards the end of the year. And I think the same goes for Nigeria. So we have still very strong, our oil production is beginning to stabilize. Now, when you talk about fiscal policy, I think the first thing, the president mentioned it during his speech the other time, is the implementation of the Orasanya report. But not just the implementation, I think that report needs to be reviewed. I don't know if that is ongoing. So that needs to be, followed with the same level of dedication and commitment that we've seen displayed by the central bank. So that's how needs to happen. So otherwise, we will continue to have this sort of, clapping with one hand, as some people will say. So we'll just be dealing with monetary policy, and then the fiscal side of things will not. Then the other thing is government revenue. But then there is a limit to what can be done with taxes. Okay, because if you don't increase productivity, firms are not doing well, then you don't expect that they will pay tax. People are already pushed to the wall, over the past 2 years actually. So you wouldn't expect that anything can happen. So is there any margin for tax revenue to really increase? It's very slim, except that we managed to get some more people into the tax pool. I know the guy who is there, Taiwo Oyedele, so he's a friend. So I think he's doing a good work. So supposing that we have more people brought into the tax net, so that will increase a little bit government revenue. But what is most important, what is critical that needs to happen, like yesterday, is that government needs to also harmonize its own spending, begin to rationalize it, and allow the same level of sanity that the central bank has introduced to also happen in the government spending pattern. If we can achieve that, I think Nigerians will begin to heave a sigh of relief, and then begin to again believe in the country.
All right, your thoughts and insights are well appreciated. As always, Professor Bongo of the Lagos Business School. Thank you very much. Do have a wonderful evening.